Vijay Mallya, Rana Kapoor, Ramalingam Raju, and Kapil Wadhawan are all these high profile CEO which literally brought their company share price to zero. Why? The sole reason were that they were the corrupt managers. And that is the thing. If your CEO of a company is corrupt and even the management if it is corrupt, then they can literally bring any share to zero. And that is where a shareholder loses all his capital. Now this is what we are going to talk in detail. One of the most important pillar for any stock picking exercise is nothing but assessing the management and selecting a best management. So guys, let us talk in detail. Hello friends, my name is Tapan Doshi. I welcome you to my YouTube channel. So let's start with management assessment. So guys, with management assessment, first thing we have to see is how long this management is there in this company. We should have a good history. We should have a 15-20 years of history which shows that yes, management is there and is performing well over the last 15 to 20 years. The CEO is there from a long term and there is no big changes within the management in between also, because that also we have to keep in mind. All these points are very important. So first we have to understand the track record of any management. What is the credibility of the management? Most important thing. When we talk about Tatas, Birlas, Ambanis, what is the thing? They have basically a big history or a long history where they have shown that yes, they are capable managers who can tackle any type of adversity coming in the business. Of course, when you are in the business, it will run as a cycle. Adversity comes and may go. Even though there are lot many economic crises coming and going out, but at that time, this is the real test whether the management is able to sustain over these years or not, over these difficult times or not. And that is also one of the main thing we have to understand. Let us understand last 15 to 20 years how the management has performed and what is the credibility of the management. Now that you can see in the balance sheet of an company, or you can check the commentary, or you can check. Now everything is available in media. Okay, you can go through YouTube, or even if you do a Google search that, for example, Infosys management talk, then you will come to know there are many videos which shows that quarterly how they are talking about their company and what are their future guidance and everything. So you have to go through all this. So annual report, media, balance sheet commentary, future guidance, all these are one of the way through which you can understand the credibility of the management. Now let us go to the second important point which you have to consider while assessing management, and that is nothing but capital allocation. Capital allocation plays a big role because a success of a company is very much decided how the management is able to put its money in the most productive segments and areas, correct? And that is what is capital allocation. Now there are many examples where the management has made a bundle for capital allocation. As a result, they literally lost their big wealth, and that is the reason why that company also fallen. And that is what we are going to talk now. And first of all, we have to take an example of nothing but Mr. Vijay Mallya. Vijay Mallya, known as a king of good times, no, he actually started his beverage company very well, and you know that United Spirits at that time not doing very well everything, but then he decided to plunge over this Kingfisher Airlines and started a Kingfisher Airlines, thinking that yes, that will give you a very much better result afterwards. But you know that aviation industry was so difficult to operate. Very few airline companies are really able to make a big money over the years, and that is where Mallya gone completely wrong, and he has not given more attention how it is allocating capital to Kingfisher. And again, no, it is not a, it was considered as a, you can say, expensive airline, and the ticket were on a higher side, and there was no operational cost cutting and all that stuff going on that. And as a result, what happened, the Kingfisher literally brought the whole Mallya group to down under his toes. And that is the thing, that bad allocation of capital literally gone and literally gone wrong, and as a result what happened, Mallaya was not able to recover after that, and that is the reason capital allocation plays big role. So in assessing capital allocation, you as an investor you have to see where the management is allocating capital. Correct. Now if they are performing very good in a particular sector, now if they are going to the another sector, you have to understand whether the management is capable enough to perform in the new segment or not. If it is not able to perform new segment, or you think that they are not will able to deliver it, better to get out of that company. So that is the thing, capital allocation, another important point you have to consider. Third important point you have to consider is related party transaction, and this disclosure is always there in the balance sheet and annual report, so that you have to check it. But what is related party transaction? Related party transaction is nothing where the promoter is getting a loan in the guarantee by giving a guarantee of the company or something. No, if the loan is given to the family members of the promoters, or there is a transaction between the company and its subsidiaries, and they are giving guarantee to a third party, and all these are the all related party transaction which analyst and as a retail investor you have to consider, because if it goes wrong, no, then company will be in a big problem. Few example you can take is simple, like you know about DHFL. The DHFL was having many shell companies, and they were doing so many transactions between the shell companies, and no money was transferring from one party to another. That was one of the related party transaction. Even another scam happened, Ramalingam Raju, that is Satyam. During Satyam times, the Ramalingam Raju actually given a loan to real estate company, that is its another subsidiary, and there was many related party transaction going between Satyam and the real estate company, and that literally brought the downfall of Satyam company. So that is the thing. These are one of few related party transactions which I told you. There are many, but yes, if you want to see, you have to go to the annual report. Also, there are many management commentaries are there based on the where the analysis asks for the clarification, and management has given a commentary on that. You can see the con call of that management once the quarterly presentation is over, so that will give you a much more better idea, yes, is there any related party transaction or not. But the best thing is to go to the basically management commentary in the annual report. In annual report everything is given. Again, some of the main related party transaction, they have to do a disclosure. Again, see the charter accountant note. Okay, now note to accounts, whatever is there in the annual report shows that yes, whoever is signing that annual report, that is the whatever chartered accountant has signed, he will give a complete commentary what he feels about the company, and again, is there any related party transaction or not. If it is there, he will give a disclosure on that. So that also you have to check before going to invest in a particular company. Fourth important point you have to consider is what the management is doing regarding their remuneration, and also how is the management behavior and the disclosure. Why I am talking about management remuneration? Because the salaries of the management should be seen properly, and again we have to pay a close attention, because it should not happen that company is going in a loss and everything, management is increasing their salaries. The salary of the CEO and all that should be less than 10% of the profit, and all these things you have to consider, because then it is been said that if the management is actually increasing the salaries and the profit is not increasing of the company, then of course the management looks like corrupt here, and that is the main thing you have to consider. And also there are so many disclosure you have to see what type of guidance the management is giving in the disclosure part, when they are coming in the television giving a commentary and all that, and whether all these guidance they are able to achieve or not in future. Because the simple is that if they are giving a very good guidance, then there may be a uptick on the stock during that time, because the shareholders may think and the market may think that yes, if the management is giving a very good comment, that means in future the stock may go up, but that may not be the case. So that is a thing, whether the management is able to deliver upon their guidance or not. The management should not give on a guidance at an upper level, that means over optimistic. Then what will happen, then in future if they are not able to achieve that guidance, then share prices fall and the market will not believe that management. But it's always better that management gives a guidance which is on a lower level, and they overshoot the result, basically, correct, they overshoot the guidance, and that way the market get a confidence that yes, whatever the guidance they are giving, they are achieving every time. So all this disclosure plays a big role. And if the management is coming every time on TV and no trying to say about good things about the company, they are not disclosing so many no pain points of the company and pain points of the economy and all that which is affecting their company, then you have to be suspicious about that management, because that shows that yes, management is something hiding which they have to disclose but they are not disclosing. So that is the thing, that's you have to stay away from such type of management. See, one of the best way to earn a great wealth through stock is through a good management. If you see the history, any bull run or bear market or whatever it is, a good company will always go through this bear and bull phase, correct? And that is why a good company will always deliver over the years. It will not be like this way, correct? It will all be like the arrow will be like this straight up, and that is what a good management is all about. And the last fifth point is nothing but how the management is using the excess cash lying in the balance sheet. If a company is good and they have a good level of cash lying there, then how they are allocating that cash? Because see, understand, a good management will never be aggressive and they will invest in another company unless they feel that yes, there will be a return, good return available from that company in future, or they are able to no, it will able to help the current company to synergize and to have a very good basically market in future which is not available to the competitor. So all these points you have to keep in mind. If the excess cash is available and if management is not finding a good opportunity outside, better they give it back to the shareholder. How? Through bonus share, through paying high dividend or buyback. All these are few options which are normally a good management think about it if they feel that that cash cannot be invested outside. And that is why one has to be very much careful that how the management is using the excess cash lying in their balance sheet. If they are not using it properly, then it shows that yes, the company management is not aware of the situation in the market. And of course, if they do some type of aggressive investment and it may backfire in future, then better to get out from that company now only. So a good management do a very optimal use of their cash lying in their balance sheet. So that thing you have to take care of it. So guys, these were the 5 main points which I wanted to talk about the management. Hope you got this. And understand guys, management is something no you have to assess every time, and if any there is a change in the management at a upper level anytime, you have to see who are the new CEO coming, who is the new management coming, what are the disclosure they have, is there any court cases going on and all that stuff. You have to take care into consideration, because the management is the vehicle through which a company can go much more ahead in their journey, and they can deliver a great return to the shareholders. But yes, you have to assess a management very carefully, so don't ignore this part. Okay, do assess the management carefully before investing. So guys, hope you like this video and hope you got lot of inputs through this video. And if you want to understand more about this type of how to assess management, how to understand our company's financial profit and loss, and how to understand whether this stock is good or not, and how to select a multi-bagger stock, I am conducting a free masterclass on 3 secrets for on stock market, and that of course on a fundamental basis and of course for a long term. So if you want to attend, just click the below link and you can attend that masterclass. See you, and I'll see you soon in the next video. Thank you.